You have spent 8 long years sitting in a fluorescent-lit corporate cubicle, staring at endless spreadsheets and listening to middle managers debate quarterly key performance indicators. Every evening on your walk to the subway, you pass small neighborhood shops and dream of owning something real, something tangible where you can build a legacy in your community. Then what feels like a stroke of divine luck appears on a local business listing board. Harbor Coffee and Bakery, a beloved neighborhood fixture for over 12 years, is up for sale. The owner, Arthur, is a grandfatherly figure with silver hair, a warm cardigan, and an endearing habit of greeting every customer by their first name. You arrange to meet him after closing hours at a quiet corner table. Rain taps against the window glass as the rich aroma of roasted Arabica coffee beans hangs in the air. Arthur leans across the worn oak table and speaks in a low, conspiratorial whisper. He explains that after a decade of hard work, his doctor says it is time to retire to Florida. He slides a stack of printed point-of-sale POS monthly summary sheets toward you. It's a complete cash machine, Arthur confides with a gentle, reassuring smile. We do over $450,000 a year in steady revenue, netting well over $130,000 in pure profit. Look at the numbers yourself. You skim the neat rows of figures. Making $130,000 a year would immediately replace your corporate salary on day one, while giving you total independence. The intoxicating vision of escaping corporate bureaucracy blinds your rational judgment. 2 days later, Arthur calls you back to the shop with a proposition that feels like a rare blessing. Listen, he says, pouring you a fresh cup of dark roast. The business broker wants to list this for $250,000. But if you can close within 14 days, I'll drop the asking price down to $180,000. He leans in, flashing a warm, fatherly grin. There's just one condition. I don't want to drag this out with corporate accountants and forensic auditors who charge $20,000 just to complicate a simple handshake between honest people. We keep it clean and simple. Panic and excitement collide in your chest. The fear that another buyer will jump on this discount overrides your professional training. You rush to your bank, liquidating $120,000 from your 401 Calf retirement account, taking a massive early withdrawal tax penalty, and securing an aggressive personal loan for the remaining $60,000. To save time and money, you skip hiring a business attorney and download a generic asset purchase agreement template online. You sign the papers on a Friday afternoon, hand Arthur a cashier's check, and take the keys. Standing behind the counter on a sunny Monday morning, wearing a crisp black linen apron, surrounded by the hum of the espresso machine, you feel an overwhelming sense of pride. You believe you have finally seized control of your financial destiny. The honeymoon period lasts exactly 19 days. It ends abruptly on a rainy Tuesday morning when a city health inspector walks through the back kitchen door holding a heavy clipboard. He doesn't order coffee. Instead, he slaps a formal notice on the stainless steel prep table, a 14-page backlog of unaddressed municipal health and safety violations dating back 3 years. The inspector shines a flashlight beneath the commercial equipment, revealing a cracked grease trap leaking rotting wastewater under the floorboards. The kitchen electrical panel is a dangerous, uninspected fire hazard, and the insulation lining the walk-in cooler is infested with toxic black mold. Arthur received 3 final warnings for all of this. The inspector says coldly, "Remediate everything within 30 days, or I chain the front doors shut." A commercial contractor gives you a crushing estimate, $45,000 for emergency repairs. Before your brain can process the financial shock, the commercial landlord walks into the lobby. You smile nervously and introduce yourself as the proud new owner. The landlord doesn't smile back. He looks at you with a mixture of cold amusement and pity. He reveals that Arthur's 10-year lease expired 6 months ago. Arthur had been operating on a month-to-month grace period while hiding the sale. The landlord slides a new lease agreement across the counter, a mandatory 60% rent increase from $3,500 to $5,600 a month, effective immediately. Your fixed overhead just exploded. Spurred by mounting panic, you lock yourself in the back office to audit the physical paper records Arthur left behind. Records you should have spent weeks inspecting before writing a check. You cross-reference Arthur's printed POS summaries against actual bank statements and state tax filings. A sickening reality emerges line by line. The steady $45,000 monthly revenue was a manufactured illusion. Arthur had been manually keying in phantom cash transactions every evening, dumping his personal savings through the register to artificially inflate top-line metrics for prospective buyers. Worse, he hadn't paid state sales tax in 8 months, leaving an unpaid tax debt of $16,000 accruing interest. Days later, 2 delivery drivers arrived demanding immediate cash payment for $28,000 in past due invoices for flour, dairy, and coffee beans. Because the generic purchase agreement you signed lacked a debt indemnification clause, those commercial liabilities legally attached to the business entity you now own. When you pull the head baker aside to discuss cutting operational costs, he laughs, takes off his apron, and tosses it on the counter. He reveals Arthur was paying him $22 an hour in tax-free cash under the table. You explain that you can only pay him legally, on the books, at market rate. He walks out the door on the spot, taking his proprietary sourdough starters and signature pastry recipes with him. 3 months later, the windows of Harbor Coffee and Bakery are covered in brown butcher paper, and yellow health department condemnation tags are slapped across the locked glass doors. State tax authorities froze your business bank accounts to enforce liens on the remaining kitchen equipment. You try calling Arthur every day for a week, but his phone number returns a pre-recorded disconnection message. An investigator later informs you that Arthur's supposed Florida retirement address is nothing more than a commercial mail drop box in a Tampa strip mall. The devastation is complete. Your $120,000 retirement nest egg is permanently gone. You are saddled with $28,000 in inherited supplier debt, and your personal credit score is decimated. Left with no choice, you update your resume and begin applying for entry-level corporate analyst jobs, preparing to spend the next decade sitting in a gray cubicle just to pay off the debt from a bankrupt coffee shop. You didn't buy a thriving local business, you bought a retired fraudster's toxic liabilities because you trusted a warm smile over a cold financial audit. The Anti-Scam Protocol. Buying a business. 1. Tax returns are truth. Never rely on POS printouts, internal spreadsheets, or verbal promises. Demand 3 years of official IRS-stamped tax returns and audited bank statements delivered directly from the financial institution. 2. Audit leases and liabilities. Always hire an independent business attorney to review commercial lease agreements, municipal health, zoning permits, and outstanding vendor accounts before signing a contract or transferring funds. 3. Beware the fast handshake discount. Anyone offering a steep price reduction to skip formal due diligence or bypass forensic accountants is actively rushing you past a financial landmine.